Hey everyone, and welcome to the Money Girl podcast. My name is Laura Adams. I'm a personal finance expert and award-winning author based in Austin, Texas. On this show, I help you master your money so you can live rich and love the journey. My goal each week is to expose you to something new from a variety of financial topics that you need to know, like investing for retirement, building credit, managing debt, insurance, real estate, taxes, and mindset. I cover the nitty-gritty details on how to manage your money for success. All the resources that I mentioned will be in the notes for each show on the Money Girl section at quickanddirtytips.com. This is episode number 473, called 10 Facts You Should Know About Homeowners Insurance. And by the way, on the Money Girl section, there's also a huge podcast archive on all of the topics that we've done. So literally 473 episodes are there for you. If you own a home, you already know that your lender requires you to purchase insurance to protect their interests. Unfortunately, many people who are paying for homeowners insurance never really understand all of its features or how they could save money on premiums. I was recently reminded of this by a listener named Carrie A. She says, "Hi, Laura, and welcome to Austin. I've lived in Austin for almost 20 years and am a longtime listener of your podcast. The company I work for had a representative from an insurance company come speak to us about home insurance and all of the things you need to think about and ask about. Is this something you could talk about in a future podcast?" Thanks, Carrie, for your kind words. I always love it when I hear that people have been a longtime listener, and this is a great question. I've done several shows about insurance, and it's not the most exciting topic, but it's a really important one, so thanks for your note. In this podcast, I'll cover 10 facts you should know about home insurance so you get the most out of it and pay less for it. So I hope you'll stick with me. If you're a homeowner, this is going to be really pertinent for you. And if you're thinking about buying a home one day, you need to know this stuff. Insurance is a big part of being a homeowner. All right, let's get going. I have a lot to cover with you on this topic today. In addition to meeting your mortgage requirements, having a comprehensive homeowner's policy is just a smart way to protect your financial future. You probably know that it pays to repair or rebuild your home after a disaster. Well, in addition, there are lesser-known coverages that homeowners includes, such as additional living expenses, which is called ALE. This pays a certain amount of lodging and meals for you when you're forced to move out of your home while repairs are made after a covered disaster. Plus, you should have liability coverage to stay safe from a lawsuit if someone gets hurt on your property or you injure someone or their property inside or outside of your home. And that's a benefit that a lot of people don't realize that they get from liability insurance. It's not just things that happen inside your home. It's also issues that happen outside of your home. Even something like your dog biting someone at the dog park or biting another dog at a dog park would be covered. However, unlike with auto insurance, there's no law that says you have to purchase any amount of home insurance. So once your mortgage is paid off, you can drop coverage if you like, but I generally don't recommend it. So let's get into it. Here are 10 facts you should know about homeowners insurance to protect your personal finances. Fact number 1, there are different types of homeowners policies. Home insurance is pretty standard across the United States. However, some states or insurance companies may offer policies that are slightly different. The most popular homeowners policy that you need to be familiar with is called HO3. HO stands for homeowners, and HO3 gives you what's called open perils coverage. That's just industry jargon that means it protects you against all disasters, except any that are specifically excluded in the policy. Fire, theft, and tornadoes are examples of perils. An HO3 policy also insures your personal belongings, so anything that you own inside your home or inside your garage. But it only gives you what's called named perils coverage for them. You don't get open perils, you get named perils coverage for your personal belongings. That means you're only covered for disaster listed or specifically named in the policy. So, if something happens to your personal property, like your furniture, clothes, or your TV, and the peril that caused the damage is not listed in the policy, you'd be out of luck. Now, there's another type of homeowners policy called HO5. This is a little superior to HO3 because it gives you open perils coverage for both your home structure and your personal property. It typically costs more and may not be offered by every insurer, but it could be worth buying it and seeking it out if you have many valuable possessions. And if you're a condo owner or a co-op owner, you're going to need an HO6 policy. That's the type of coverage for condos, which basically just covers the structural parts of the building that you own against named disasters, and that includes your belongings and personal liability. No matter what type of policy you have, there are 3 options for the amount of coverage that you'll receive, minus your deductible, when you make a claim. The first is called cash value coverage. This pays to repair or replace your property or possessions up to the policy limits, less a deduction for depreciation. And because of that, it's sometimes called market value coverage, and this is the least expensive option. However, it means you probably won't get a payout that's enough to rebuild your home or replace personal items after a serious disaster. So, for instance, if your TV were damaged in a windstorm, you would not get the cost to go out and buy that same TV today. You would get the cost of that TV less depreciation. The second type of coverage that you can get is called replacement cost coverage. This one pays to repair or replace your property or possessions up to the policy limits without a deduction for depreciation. So, this costs more than cash value coverage, but it means that you could fully replace what you lost. So if your TV was damaged, you would actually get the cost to go out and replace that same TV today. And when you have an HO5 policy, that was the one that was superior to the HO3, this is the typical coverage amount that you get with that type of policy. And the third type of coverage is called guaranteed or extended replacement cost coverage. This is less common, but it gives you the highest protection out there because it pays the cost to replace your home as it was before a disaster, even if it's higher than the policy limit. Some companies extend the benefit to a certain percentage over the limit, such as 25%. And you may be thinking, well, what's the right amount of coverage to get? Well, when setting your homeowner's coverage limits, remember that the price you pay for a home includes the land that it sits on, and land is never insurable. You only need insurance to rebuild or repair damage to your home structure and the outbuildings. If you include the value of the land in your home insurance, you'll end up paying an unnecessarily high premium, so don't overinsure your home. Okay, fact number 2, not every type of damage is actually covered. While a standard homeowner's insurance policy gives you many protections, such as coverage for the structure of your home, your personal belongings, loss of use, and liability, it doesn't cover everything. Policies often state that for something to be covered, it must be, quote, sudden and accidental. That means if you've had a leaky faucet that caused damage over many months, it probably won't be covered because you neglected proper maintenance. However, even if they are sudden, certain natural disasters are never covered in a standard home policy. These include floods from groundwater and earthquakes. You can add earthquake coverage to an existing home or renter's policy, but flood insurance must be purchased separately. It's kind of like its own separate animal when it comes to insurance. And you can learn a lot more about flood insurance at floodsmart.gov. Windstorms, including tornadoes and hurricanes, are typically covered. However, in some high-risk areas, you may have separate deductibles for damage caused by these disasters. Unlike a typical homeowner's deductible of $500 or $1,000, hurricane deductibles are usually 1% to 5% of a property's insured value. For instance, if you have dwelling coverage of $200,000 and a 5% hurricane deductible, you'd pay the first $10,000 of damages caused by a hurricane. Other types of perils that may not be covered unless you add them to a standard home policy are mold and sewer backups, or if these perils are included, it may be at a very low amount. If you have a home-based business, maybe you've got customers who come into your home, you have special equipment or inventory, a standard homeowner's policy typically won't cover these items and will require a separate commercial insurance policy. And you'll also need a different type of policy if you turn your home into a rental or vacation property. Fact number 3, some belongings may not be fully covered. It's good to know that your valuable personal possessions are insured against disasters and theft under a homeowner's policy. But what many people don't realize is that certain types of items come with coverage limits or caps. For instance, jewelry, watches, furs, silverware, electronics, and firearms are typically limited to $1,000 or $2,000 of coverage. If you have jewelry worth $10,000 that's lost or stolen, you would obviously come up very short. Another protection you get with home insurance is that your belongings are covered outside of your home. If your laptop, let's say, is stolen from your car, auto insurance won't cover it, but your homeowner's or renter's policy will. Perhaps you lose a diamond from your wedding ring, you have luggage stolen while you're on vacation, or you have items in a storage unit that get damaged. You're going to be generally covered with a standard homeowner's policy. However, the payment for off-premises claims is typically a small percentage, such as 10% of your coverage limit. So if you have a $200,000 coverage limit, you may only get $20,000 of off-premises coverage. So pay close attention to the homeowner's insurance limits on your possessions inside and outside of your home, and consider adding a rider or endorsement to beef up your policy when needed for valuable items like jewelry. Fact number 4, home maintenance really matters. Insurance companies want to make sure that your property is in good shape so that it's safe and won't be vulnerable to claims. Additionally, if they find that damage occurred because you neglected to maintain your home, they can deny a claim. So keep your trees trimmed, have regular roof inspections, and watch for any signs of leaks. If you ever see unusual spikes in your water bill, that may indicate that you have a plumbing leak inside or outside of your home that should be located and repaired right away. Fact number 5, your credit affects the rate you pay. If you're a regular Money Girl podcast listener, you already know that your credit history reaches its tentacles far into your financial life. Not only does it play a role in the interest rate you pay for credit accounts and whether you can rent an apartment, but it also affects your insurance premiums. A study that I did for insurancequotes.com found that if you have fair or median credit, you pay 32% more on average nationwide for home insurance than someone with excellent credit. But if you have poor credit, your premium for homeowners doubles. You'll pay 100% more. Only a few states currently prohibit insurers from using credit when setting home insurance rates. So in every state except California, Maryland, and Massachusetts, keeping your credit in tip-top shape will help you save a substantial amount of money on home insurance. Fact number 6, insurers may not love your dog as much as you do. I'm a huge dog lover, and so it was really surprising to me to find out that your furry friend could cause problems with your home insurance. Since coverage typically includes liability for all members of your household, including your pets, insurers are very particular about which dog breeds they'll insure. The average cost of a dog bite is about $30,000, and they actually make up 1/3 of all liability claims. Large, powerful dog breeds may be blacklisted altogether or cause you to pay an inflated home insurance rate. Some breeds most commonly excluded from coverage include the Akita, Alaskan Malamute, Boxer, Chow Chow, Doberman Pinscher, German Shepherd, Great Dane, Mastiff, Pit Bull or Staffordshire Terrier, Presa Canario, Rottweiler, Siberian Husky, and Wolf hybrids. So if your dog is blacklisted, consider buying a separate, inexpensive umbrella liability policy. You could get $1 million of coverage for less than about $300 per year. Fact number 7. You shouldn't always make a homeowner's claim. Insurance is one of the only products you buy that you hope you'll never have to use. Not only is repairing damage to your home a real hassle, but you may not realize that simply making an insurance claim can cause your rate to skyrocket for years. Insurance companies have statistics showing that after making one home insurance claim, you're more likely to make a second and a third one. So, the company typically adjusts the cost of your coverage to compensate for that future potential risk. Depending on where you live and the type of claim you make, such as property damage or liability, your annual premium could increase 9% on average nationwide after making just one claim. Insurers track your claims history using shared databases, such as the Comprehensive Loss Underwriting Exchange, which goes by CLUE for short. The CLUE database maintains all insurance claims you've made for your home and your vehicle for up to 7 years. What's interesting about claims history on a home is that even the prior owner's insurance claims made over the previous 7 years can affect the homeowner insurance rate that you have to pay. While that may seem unfair, an insurer views a property with multiple claims as a higher risk for having more claims in the future and may charge you more. But what's even more surprising to many is that simply talking to an insurance company or agent about specific damage to your home can result in higher rates. In most states, insurers can make a notation in your CLUE report if you simply inquire about damage that occurred. So be careful about what you say to insurance companies. You can view your auto and home CLUE reports at LexisNexis for free every 12 months, and I'll put a link to that resource in the notes for the show. Just like with your credit report, you should review it carefully and dispute any errors right away. The bottom line is that to save money, carefully weigh whether making a claim is in your best financial interest over the long run. Never make small, frivolous claims. Only file a home insurance claim when it's absolutely necessary. Fact number 8. There's a deadline to make a claim. When you do need to file a claim for major damage, don't wait too long. Many policies include a 14-day reporting window to make sure that damage doesn't get worse over time. If you miss the claim deadline, you could be out of luck and have to pay repairs out of your own pocket. Fact number 9. You need to create a home inventory. If there's a disaster, the last thing you want is to have a claim denied because you don't have good records. Document what you own by creating a home inventory that lists your personal belongings and what you paid for them or their appraised value, then store it in a safe place or online. Use your smartphone to take video of each room and the contents of closets and cabinets. That would help you remember everything if your home was completely destroyed in a fire, storm, or tornado. And our last fact, number 10, you may be missing discounts. I mentioned that insurers set premiums based on your potential future risk. When you make home improvements or add technology that makes your home safer, like smoke detectors, alarm systems, deadbolts, and upgraded doors, windows, or roofing, you may qualify for discounts, so let your insurance company know. Another smart way to save is to bundle your home or renter's policy with other coverage, such as your auto insurance or life insurance. So do that all with the same company. That typically gets you a discount. Also, consider increasing your out-of-pocket deductible. That's only if you have enough emergency savings to cover it, because raising your deductible reduces your premium. Shopping around for quotes is the best way to make sure that you aren't overpaying for coverage. Use a site like insurancequotes.com or netquote.com to get free home insurance quotes. No one enjoys paying for insurance, but when disaster strikes, having a homeowner's policy can be a financial lifesaver. If you're looking for strategies to build your credit so you can keep your insurance rates as low as possible, check out my Credit Score Survival Kit. It's a free tutorial I created for you that includes a video, short ebook, and audiobook. I'll include a link to download it on the Money Girl page at quickanddirtytips.com for this episode. Or you can text me and I'll send it to you right away. Just text the phrase credit score. So credit score with no space. If you send that phrase to the number 33444, I will send you the free Credit Score Survival Kit. And thanks so much for listening to this episode. If you enjoyed it and are getting value from the show, please let me know. Take a moment to submit a review of the show on iTunes, and of course, be sure to subscribe. A great way to keep the money conversation going with me and a really great community is to join my private Facebook group called Dominate Your Dollars. To request your invitation, visit Dominate Your Dollars on Facebook or send me a text message for immediate access. Just text the word dollars, DOLLARS, to that same number I mentioned, 33444. I hope to see you in the group. You can also find me on Twitter at Laura Adams, that's LauraAdams with no space. And send me a question or comment anytime on my contact page at lauradadams.com. That's all for now. I'll talk to you next week, courtesy of Money Girl, your guide to a richer life.